Crypto and digital assets in the U.S. has got a market cap of around $1.1 trillion right now. It's been there for a bit. Do you acknowledge that this asset class has staying power in the U.S. economy?
It appears to have some staying power. Of course, that 1.1 trillion what was that a year ago? A lot higher.
Yeah. It's had some volatility in large measure due to the lack of legal clarity. And so hopefully this committee will help that quite a lot here this summer with at least two bills, one on stable coins and one on market structure. And it'll be clear not just for Congress, but for regulators, including Chairman Gensler, and obviously market participants, whether they're forming the ideas or investing in the ideas or participating in the activities.
From Papa Powell himself, he concedes crypto is here to stay. And check it out. Just this week, Bitcoin dominance is up over 50%, at about 51% at the time of this video. And zooming out, we can see this is the first time since April of 2021, over 2 years ago, since we've seen this marker breached. Bitcoin dominance is just the percentage of the total value of Bitcoin compared to the entire market cap or total value of the entire crypto market. So over 51% of the value of the whole crypto market is Bitcoin. Bullish. The other day, we did have a brief dip in price action. Bitcoin slumps below 30,000 after SEC says ETF filings by BlackRock and others are inadequate. NASDAQ and Cboe weren't specific enough in their filings, the U.S. regulatory agency said, pointing out that their ETF applications did not outline the nature of surveillance sharing agreements, key provisions to allay the SEC's concern over market manipulation that BlackRock, Fidelity, and other asset managers had touted. It also said the exchanges did not name the Bitcoin spot exchanges the asset managers planned to partner with in these agreements. Did we really think Gensler was going to clap back with an approval the first time around? Ego, and probably more likely a ruse to try to make the fact that they are letting the big dogs like BlackRock have their first bite at capturing market share not so obvious in their overall Operation Choke Point 2.0 scheme. So, Coinbase will be surveillance partner for Fidelity, other Bitcoin ETFs, refiled applications say. The SEC told Cboe it needed to name its partner earlier Friday. The regulator still has to formally acknowledge it is reviewing the applications. The SEC will kick off an initial 45-day review period when it publishes the filings in the Federal Register, the national logbook, but can extend this to a total of 240 days. Complicating the SEC's calculus may be the fact that it sued Coinbase earlier this month on allegations of operating an unregistered securities exchange, broker, and clearinghouse. Though the SEC is not alleging that Bitcoin itself is a security, and SEC Chair Gary Gensler has often referred to it as an example of a digital asset that is not a security. So yeah, it could be a while until we see a spot Bitcoin ETF. My random wild guess, as we've been discussing together on the channel, is that there is a plan in motion where Coinbase gets acquired and controlled by JP Morgan, the largest bank in the United States. That in tandem with the first spot Bitcoin ETF approval to be BlackRock, the largest asset manager in the world. Basically, traditional finance will have the crypto markets cornered, at least in the US, which will make it difficult for people residing in the US to get in and out of crypto in the future. So I somewhat agree with this headline. Don't be naive. BlackRock's ETF won't be bullish for Bitcoin. Are regulators trying to disarm crypto-native companies in order to pave the way for BlackRock to steamroll the industry? Oversized influence on what is intended to be a decentralized monetary system is clearly a cause for concern in and of itself, but the broader issue with ETFs is that investors cannot withdraw the underlying Bitcoin. It's in the ownership of Bitcoin that the true benefits lie. Another thing to consider if a spot Bitcoin ETF is approved is the $18 billion worth of Bitcoin that has been locked up in the GrayScale Bitcoin Trust for 3 to 8 years now. How much of that Bitcoin will enter the market after GrayScale converts into an ETF, allowing its investors to sell their Bitcoin? So yes, in the short term, we may see significant sell pressure after the approval. And if that's the case, Wall Street will be chomping at the bit to acquire as much as possible at those lower price levels. Either way, this ETF fiasco is likely a longer timeline than we think, and it coincidentally might wrap up around the time of the next Bitcoin halving in March of 2024, which would be absolutely wild. We are in for an extremely interesting next 12 to 18 months, especially when considering the decline in mainstream media, increase in independent news sources, Twitter gaining popularity, all in the midst of the most important US presidential and congressional election for the crypto industry at large. Let's go. Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Let's take a look at the global news stories and the state of the current macro environment. Please be sure to check out our sponsors, iTrustCapital, Morales Money, and Tangem Wallet. Trade cryptocurrencies tax-free within your own individual retirement account or IRA with iTrustCapital. Start practicing learning how to find altcoin gems before they pump in the next face-melting altcoin season using Morales Money. And invest in your very own cold storage hardware wallet like Tangem Wallet. It's the size of a credit card, multi-currency, multi-chain, and super easy to set up. Note that since the Ledger fiasco, Tangem has been swamped, so orders have been backed up for a few weeks. So get your spot in line for the next batch of wallets. Scroll down and use links below to access the correct and official sites, as well as redeem any special offers they have for us. Sweet, July is here, and the Fed plans late July launch of FedNow payment system. And JP Morgan Chase and 40 other US banks conducting FedNow trial runs ahead of the instant payment services launch. The Federal Reserve says it plans to increase the number of banks using FedNow this year and in years to come until all 10,000 have adopted the technology. Other large banks testing the service to start using it in July include Bank of New York Mellon, US Bancorp, and Wells Fargo. The US Department of Treasury is also intending to use the service. So basically all the big banks, at least in the US, that are part of the global banking cartel that runs the whole world, which we explored together in this video, you can check out by clicking on the link above, are gearing up to try and completely control our property, that being our money, and by proxy, every aspect of our lives with a central bank digital currency, which if you want to learn more about how and why, you can check it out in this video by clicking on the link above. What most people don't understand is how the current banking system operates right now is woefully unprepared for this kind of radical transformation in banking, which will result in a lot of bank failures, which is all by design, as their mission is to consolidate the US banking industry as much as possible to concentrate and amplify the powers of the largest banks. This is because the FedNow system will allow for 24/7, 365 instant, nearly feeless transactions. And when banks have been used to the 9 to 5, Monday through Friday, except on every holiday known to man type of operations, with high transaction fees and settlements that take 3 to 5 days to complete. Also, banks would take advantage of this arbitrage by lending and borrowing funds between each other with overnight bank funds. With all this in mind, here are the issues many banks will face with the new FedNow system. 1. Third-party payment providers and banks that heavily rely on transaction fees or interchange fees will take a massive blow to their profits. 2. A switch from 9 to 5 Monday through Friday minus holiday operations to 24/7, 365 will require banks to invest in new technology and more staff to monitor this activity and safeguard against cyber attacks. And 3. Instant money transfers increase the possibility of bank runs. And as we saw with the start of the banking crisis with bank failures this past March, even with the current technology, the speed of communication of issues and people clamoring to withdraw funds is already an issue. All of this in conjunction with the commercial real estate crisis and high interest rates with no substantial decrease from the Fed in sight. Oh man, this banking crisis is still quite early and we will continue to experience waves of insolvency across the board. I mean, just this week, Federal Reserve's banking bailouts reach a new weekly high of $103 billion. The Fed's emergency loan facility has reached new highs as embattled banks are needing a central bank bailout. The milestone figure means that the Fed is still bailing out banks despite its attempt to reassure investors that the banking crisis is over. American banks are not the only ones in trouble. According to a Bloomberg report earlier this week, Germany's Bundesbank may need a bailout for losses on bonds acquired as part of the European Central Bank asset purchase programs, all before the rollout of FedNow. Scary. And to make matters worse, Fed Chair Jerome Powell warns that to cool inflation, at least 2 more interest rate increases are probably coming. Is he bluffing? Is he serious? Let me know what you think in the comments below. My random wild guess is that we see another hike. As last week, we saw the UK do another hike. And I think this would be bullish for Bitcoin because as banks continue to fail, people and businesses will want some money out of this mess of a system. Personally, I have no idea how people with zero exposure to crypto sleep at night, especially the ones with most of their wealth sitting in US dollars in banks. All the while, the world continues to de-dollarize as foreign borrowers issue a record amount of Yuan debt, helping internationalize China's currency. China's monetary easing is attracting foreigners looking to borrow Yuan at relatively lower rates, helping globalize the currency. It's the indirect result of a slumping Chinese economy, which has motivated the country's central bank to introduce interest rate cuts this month. See, the US took this rate hike thing way too far. However, this is likely on purpose because they want to destroy the current banking system to usher in a new one, like we've been discussing. China already has a system like the US is looking to implement in place. China already has their CBDC, social credit system, and complete control over everyone's money. So with their mission to degrade the dollar as the world's reserve currency, they are highly incentivized to attract foreign investors and partners. Crazy times. But what's great for us as crypto investors is big companies are continuing to use and build on Web3, which will help bring mass adoption to the space. Let's go through a flurry of bullish blockchain tech adoption stories from the week together. First, a quick word about Tangem Wallet. These crypto exchanges are not immune to this widespread financial crisis, so we need to make sure we are transferring our crypto assets off of exchanges to hold on our very own cold storage hardware wallets. Since Ledger's announcement of their Recover Services software update to their devices, Tangem Wallet, an alternative that never reveals our private keys or seed to anyone, has been blowing up recently. There is a wait for the next batch of wallets, so make sure to get your spot online earlier rather than later. It looks like a credit card, uses the highest standard of security among crypto wallets, known as EAL6+, which is a level of protection used by NASA and in passports. The source code for Tangem's mobile app is all open and available for review on their GitHub, which is important for full transparency to ensure there are no backdoors built in and that the funds can be accessed if the company shut down for any reason. Instead of a seed phrase as the only way to back up our crypto wallets, backup copies of the wallet are created and used on other Tangem cards that we encrypt with our own unique access code we create for each card. Also note the pricing for this cryptocurrency hardware wallet is much cheaper and more affordable than other ones, with free shipping and an option to pay in crypto, which is a plus for any beginners just getting started or anyone who is looking to onboard friends and family into crypto with a simple, easy-to-use, secure, self-custody wallet. So scroll down and use the link below to access Tangem's correct and official site, as well as redeem any special offers they have for us. Sweet. Let's rapid fire through these bullish news stories from the week. Ubisoft announces Web3 blockchain game, Champions Tactics, Grimoria Chronicles. It's a late entry to the Web3 blockchain-based game crave. Better late than never, right? If you've been following the channel for a while now, you know how wildly bullish I am on blockchain tech, and crypto revolutionizing the gaming industry is going to be wild, fam. Next, Lacoste reveals gamified, tokenized ecosystem for NFT holders. The program Underwater will reward engaged users with rarity-related NFT perks that the fashion brand says will increase those digital assets' value. Cool. Also, luxury fashion house Dior embraces Ethereum for a new line of men's sneakers. What sets these sneakers apart is their unique online authentication system and accompanying NFT. Each pair of shoes will be linked to a digital twin, a matching NFT minted on the Ethereum blockchain. Cool. And the biggest boys on the block know this tech is inevitable. Asset tokenization is a $1 trillion market opportunity. JP Morgan, BlackRock, and Goldman Sachs think so. Asset-backed securities, money market funds, ETFs, intellectual property, and fixed income. This suggests a nearly limitless total available market, TAM, for tokenization. Private capital markets comprising private company equity, debt, and real estate face challenges such as illiquidity, outdated asset pricing information, and multiple intermediaries controlling price discovery and updates. These obstacles make this sector particularly ripe for financial innovations. Amazing. So I'm going to leave us with a random wild guess about what the next driving narrative for the next crypto bull run will be: DeFi, or decentralized financial projects. I think that these big financial institutions will build and connect with APIs of projects in the DeFi space, like Uniswap, Alba, Curve, Synthetics, and similar, which will cause a ton of money to flood into these projects. And if you are familiar with DeFi, at the time of this video, I have a beginner's guide breaking everything down in the works, so make sure to subscribe and keep an eye out for it in the coming weeks. Awesome. If you would like to watch a step-by-step video guide all about Tangem Wallet, check out this video. If you would like to learn about more tools like Tangem Wallet, we can add to our DeFi Tool Kit before Wall Street and government tries to restrict our access to real crypto, check out this video. And to get your very own Tangem Wallet, click on the link on the screen. Like and subscribe for more. Be safe out there.